Hey, 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 currency traders. Ni hao ma. Jumbo. Ohio. Good morning. Let's trade some currencies. Forex, gold, oil, yen pairs, dollar pairs, Swissy pairs, euro, pound. It's all moving and it's all good. So let's go, my friend. Let's go. Bum, 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 bum. Hey, good morning. Trading some currencies. Currency traders. Loving the trading. What a great market, huh? Isn't that nice? Since about the third week of August, things are moving nicely. Volume and volatility is returning to the markets as children return back to their school. So that's really good. That gives us opportunity. So the thing is, are these new trends or the old trends or whatever? But I hope it fits into your bias just beautifully. And you make a ton of pips. Let's make some pips, baby. Anyways, hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. In fact, Traders Way came to me and they said, we want our clients to be successful because successful, profitable traders are the best clients because they trade every day, day after day, week after week, month after month, year after year, decade after decade. So that's what we want. And I said, well, hey, cool. So here we are, a symbiotic relationship. I want you to succeed. They want you to succeed. You want to succeed. So let's all succeed together. Come on. Give me a hug. Ugh. Yes. So blood, sweat, and tears for years. That's it. Not a problem. So today we'll cover technical analysis, fundamental analysis, and anything else that you want. The only thing I request is some feedback. Would you please leave a like? Would you please leave a comment? Would you please subscribe? When you subscribe, YouTube is supposed to say, hey, the webinar has started, and they're supposed to bring you right in. Yeah, that works some of the time, maybe even most of the time, but often people just don't get notified, or they get notified way late. So the other way you can do it is go to twitter.com/FXBootcamp, and when I hit start, a tweet is sent out. So you can also do it that way. See, always have a plan B. My charts templates are free. You can download them, install them into your Traders Way MT4, and you'll have the same tools I have. See? Compliments of the firm. So thank you very much for being a positive part of our community. And if you have not become a positive member of our community, start by visiting TradersWay.com and getting that demo account, huh? Am I single? No, I'm married with kids, yo. Beautiful children, too. Beautiful wife. Anyways, but thank you for asking, Richie. Anything else? Hey? Lots going on. So Hong Kong's on the move in a positive way. All of Asia's on the move in a positive way. It's amazing how these things always happen when people come back to trade, huh? Mark says, hey, thanks for all the time I share with you guys and the knowledge. Well, no, thank you. Thank you for all the positive feedback that you guys left yesterday. I really like that. Are you EA in your trading? Not to the extent that you're probably asking, Abdul. Being a trader, I like to pull the trigger. And it sounds mentally deranged, in my humble opinion. I'm not saying it is, but to me, it seems mentally deranged that two things. You would want an EA to trade for you because now you're not a trader. So what are you? And the second part of it is I like doing the work. See, I like trading. I like Forex. I like being in these asset classes, and I like the work. But that being said, I do use EAs for things like risk management and all that kind of stuff, but not to actually trade. Okay? Does that make sense, Abdul? I'm not saying you can't, but I'm a trader, so why would I want a robot to trade for me? Right? Let's say you're a professional golfer. You're like, yeah, I have a chance to play with Tiger Woods this weekend, but I'm going to have my robot do it. It's too hot. I'm going to have my robot golf for me. Or, any other profession like that. It just, to me, it just makes no sense. But anyways, let's move on.com. Guten Morgen. Jumbo. Okay. Hey, no problem. And I mean no offense to it if you're an EA guy. That's no offense, but that's totally my point of view. All right. Drawing tool is gone. Hang on. Where's my drawing tool? Hang on. What's up, Gump? Where'd it go? All right, it's over here. Okay. This is interesting. So we're looking for a move to happen this week, right? And we're sitting on a bottom here. And really I should have this like that. And we're still in a range. You can see that bears are going to try to bring it back down here. But bulls are really hoping for this and then probably down and then up. Okay, that's kind of where we are here. So up for this pair, or for actually the world, having this pair go up means risk on. Having it go down means risk off. Okay, and notice one thing here, that we're in the middle. Oops. We're in the middle. It's not a great place to trade, and we've made a higher high. So like I said, there's some bearishness here, or there could be some bearishness, but probably not this week. Probably next week if we float around here. I'm going to get my armrest set here. Okay. So we don't really have it yet, but so I think what you'll see is something like this. What do you think? I could see the potential for a rollover here, but it's just not the right position, not the right time. But so right now, that seems to me we're a little more risk on. Okay. So if you're a bull and you like these ideas and you're throwing in some price action, oops, it's supposed to be price action. That ain't price action, boy. Price action is more like, okay. If you're going to use some price action, a little bit of a monthly pivot, you're going to think like this, and that has to do with whoever entered here was thinking that all along, is the other point I'm trying to make. Okay. Sammy, we do the swing trading group at 11 a.m. Eastern time. So Sammy, feel free to join the swing trading group. I include the training course now, so you don't have to pay $1,000 and then pay another $1,000 and then pay $100 a month. Now you can just join the group. So I think your first month is $500, and then after that's $99. So you're saving like $1,600 from last year. So if you're going to join, it's swing.fxbootcamp.com. You set up your swing live with us. Okay. Well, do you have a specific question about it, Abel? See, none of this really matters, really. The reason for it is the Fed has adopted a new policy. How long ago has it been now? 4 months ago? Or 6 months ago, let's say. They were talking about it 6 months ago, let's say. Okay. Okay. And what I've been telling you is news is not fundamentals, and fundamentals drive the market. So the Fed 6 months ago created a policy of cutting interest rates. So the comment I have about ISM is, will this force the Fed to change their policy? That's all you have to talk about. Nocturnal Black says no, fundamentals are taught on the swing trading group. No, swing trading. Swing trading, not fundamentals. You'll have to take the fundamentals course, and that'll knock your socks off. But no, swing trading is just swing trading. Blessed morning to you, Carly. Disinflationary, yeah, Gregor's. Yeah, well, it pisses everyone off that pay the bigger money, right? Well, I'm sorry. So anyways, let's move on.com. So these are all Swissies. Nice. Here's an example. Okay, here's an example of the counter trend. Okay. So again, this is something you learn in the swing trading course. M3 to M1 because of this, and what you either know it or you don't know it, but because of that, the course says it should go to at least this point. Is there seasonality due to commodities on currencies? Yeah, Caroline, absolutely. That's one big secret, like literally hardly anybody knows. Okay. But anyways, yes, guys, look at this. Bump, 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 bump. It's actually in the course. Isn't that neat? This is textbook, guys. Textbook. Okay. So now we're in here, and it really comes down to if you're a bull or a bear. Bears are going to want to either force a lower high or a quad top. No one really wants a quad top. No, I have not re-recorded it, Isam, but I will be with the group. Okay. But I'm back in school now, too. Yesterday was my first day. My professor worked as a management consultant for 12 years or something at McKinsey. He got some undergrad degree from, I don't know, some non-Harvard school. Then he went to Harvard Business School when he was done being a management consultant. Not bad, right? A lot of people do that. Graduated top of his class. Then decided to go to Harvard Law School. Did that for 3 years. And graduated top of his class. Now he's my professor. I'm like, oh, snap, dude. So anyways, this guy is, anyways, it's going to be an interesting class. Carly says, Wayne, you actually called this trade days ago. Yeah, I totally did. But the thing is, Carly, remember, so I don't actually remember saying it, but it makes sense to me. I mean, that's the funny thing. So I would do it again and again and again and again because it just is. It's like reading sheet music. If you don't know how to play piano, it's crazy. Like, these are just dots and lines. It looks like an alien language, and it is an alien language. But once you know it and you've learned it, then it's easy. You're like, that's a C, right? There's an F sharp. I mean, right? This is a whole note. This is an eighth note, right? And you're like, I could do this all day. So an M3 to M1, well, let's just say the pivot profit zone. That is step one of a textbook swing. And I would make that call every time. 1,000 times out of 1,000 times. And then we would say, hey, if this hit that like it did here based on the timing of everything, then you would expect it to go back to here. But right? But that's why I put it in the course. So that's what it often does. Now that we're here, though, I'm very clear, and you can see maybe it's same with the 200 EMA. I don't know if it's going to go further up or down because we're at a neutral point. Okay, at this point, bulls and bears agree. So I don't know who's going to take over. Right? This is like now 50-50 odds, where this is highly likely bears are going to take profit, right? Here, I don't know what anyone's going to do. Bears are going to sell. Some bulls might buy. I wouldn't buy there if I were me, but someone, there's always, I teach my children, I say never underestimate somebody's stupidity. Someone's going to buy that. As stupid as it is, someone's going to do it. But I think the overwhelming pressure still is plausibly like this. So that would be sort of a plan A, and that would be sort of a plan B. But I wouldn't be buying there. If I wanted to be a bull, even this one's dangerous. Like, I'm not saying you like it. And the way I teach it is like, it's you can do it, but I don't recommend it. Okay. Carly says, I believe now it's going to go down and blah, 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 blah. Great. That's great. And that's what a bias would be, right? Cool. Then start setting it up. So this is your plan A is going to be right in here. Okay. And I'll give you a hint. I'd be short this for 10 days if I were me, maybe longer. I would not day trade that. If you get a great trade here, you get this set up and you start to make profit, I'd be going for hundreds. But that's me. Okay. Let's see. Yeah, here's a double swing. Now this one is actually fundamentally confusing. This coming down means risk on. This, right? Right. Down means dollar weakness, which is good macro, but down means Swissy strength, which is bad macro. So this is a consequence of dollar moving independent of Swissy, and Swissy moving independent of dollar. And even though you get some nice little trades here, if I were me, I wouldn't do it. Okay. But here's a nice little M2, M4. Okay. And now this is an M3, weekly M3, monthly M3. Both point us down there. So I look at this and I see technically this makes sense. Fundamentally, it does not. So I would ignore it if I were me. Okay. All right, let's do some yens. Right on, Carly. Forex Gump, it goes back to my comments yesterday where Europe is so bad now and the prices are so low and the economy is so strong here in the United States that the asset values are high. So at any moment, an American feels reasonably confident about the near future. instead of buying more stock market or buying more real estate or making other types of investment into the American economy, which is already highly productive. So yesterday we talked about return on capital. Adding more capital to this economy gives you hardly any return. So there's a diminishing return, right? So how we do this? How we do this? Hang on. Let's do template blank. All right, so you got you're making an investment decision now as a CEO. Okay, and let's see if I do this right. Capital. This is like machines. Okay, and this is output. So this is, let's change this. Let's make this even simpler. Okay, so I make widgets. Okay, I'm the CEO of widget.com. Okay, and so widgets, this is the number of widgets. No, I got this backwards. Let's do it this way. It's this way. Widgets are down here. Widgets. This is the number of widgets that my factories produce. And this is the machines. Okay? So this is the number of machines I have in my factory. I can add more. I can build another factory, all that kind of stuff. And okay? So at first, I got no machines and no widgets. I'm doing them by hand. Okay? Now I add a machine, and my productivity goes way up really fast. I add 2 machines, and it goes up really fast, right? Now this has to do, I guess I have to do it on the margin, right? I have to do this marginal. So anyways, what happens though is you start to see things like this. Oh, you know, even that I did wrong. Hang on. I guess I should do it this way. You add another machine. Okay. Why does this happen? I did this wrong again. I can't think and draw charts at the same time. Terrible way. Okay. 1 machine, 2 machine, 3 machine, 4 machine, 5 machine. But we're getting a line that, wait, even that's not drawn right. 1 machine, so machines are not down there. Maybe it is. Maybe I got them mixed up. Machines over here. Anyways, let me tackle this a different way since that didn't work. Let me tackle this a different way. You own a bakery, okay? And you make bread. And people say, you make the best bread. Everybody loves it. You should go into business for yourself. You say, okay, so at first you make a few, you make as many loaves as you can in your house. And you go out to the marketplace and you sell them as quickly as possible. Everybody loves them. In fact, you could sell another 100, but you just can't make that kind of bread in your house. Okay? So you decide you're going to invest some money now and buy some capital. You're going to buy a bakery. And the bakery has 1 big commercial oven and counter space and some mixing machines, and everything's good. Okay? So you go out there and your productivity skyrockets. Do you understand? Skyrockets. Instead of making, 12 loaves of bread a day, you can make 200. Because you got all the mixing machines, and you can buy flour in larger quantities, so your price per loaf of bread starts dropping, right? Your productivity skyrockets because now in this big commercial oven, you can make dozens at a time. And you go out there and everyone eats your bread and you're like, this is the best bread I ever had. So now you got a problem. You sold a couple of 100 loaves of bread, but there's 1,000 people outside waiting. What do you do next? You hire somebody. You hire a helper, another baker. Once again, productivity goes up like crazy. Now you're trying to make 400 loaves of bread, but you realize you can't really do it. So why? Because you can only bake so many loaves of bread in your oven at one time, and it takes a certain amount of time in the oven, right? You can't cook the bread 20% less because it would come uncooked. It'd come out uncooked, right? So there's a maximum, right? But you're hauling ass and you're producing 300 loaves of bread, so your productivity went up 50%. So now you're making more money. And you find out it's a lot of work, and your helper starts complaining, so you hire a third baker. So now you're maximizing the use of the mixers, you're maximizing the use of the oven, you're maximizing the use of the counter space, but you can't get past 300. So you still only produce 300, right? But now you got to pay for this third worker, so productivity per worker has gone down. The cost per loaf has gone up. You're like, wait, and you still got 1,000 people outside waiting to buy bread that you cannot even serve. So you buy another oven. Boom, productivity skyrockets again, right? But you can see at some point this gets up and up, so you can only have so many ovens, and now you can see that you really should have 2 workers per oven to produce 300 loaves of bread. And if you want 600 loaves, you'll need another oven, but your factory might only hold 10 ovens, right? And then what happens too is your mixing machines start breaking because you've been using them all day. So now you have to reinvest some of your profits into maintenance and all this. And there's these diminishing returns, and you can get to the perfect sort of mix of capital and labor, is what I was trying to show you, is where at first your productivity skyrockets, and then per unit it flattens out. And then what? You add another oven and a couple more employees, and it skyrockets again, and then it diminishes. I can't even remember what the topic was anymore. Okay, but it's not a shift, it's the diminishing returns. What the heck was the topic now? Somebody asked something. Depreciation. That's on the machines, yeah. Oh, I know what it was. So Americans have basically, I don't remember. Okay, so here's what's happened in America. Okay, the factories are full of machines. These are ovens, and these are bakers. Okay? You get to the point where if you hire more workers, or if you add more equipment, you have to build another factory. And you're like, well, I don't want to build another factory. I'm not ready to go from 1,000 loaves of bread to 2,000. Plus, then I have to fill it with 10 ovens, not one, and hire 20 more workers, but I can't find workers, and that's it. So the return on capital, you can't really adding, right? Let's say going from 9 ovens to 10 ovens, or from 12 workers to 13 workers, will give you a very, very low return on that investment, but the investment might actually be quite expensive. Like I said, if the only way you can increase productivity and lower your per unit cost is to add another factory, it's big money, right? So it's either low return or big money, or you say, well, why don't I just go to the UK and buy a bakery in the UK? And bakery, I probably didn't spell that right. But anyways, start selling your awesome bread in a new market. You can buy an existing factory that already has ovens, that already has mixers, And because their currency is low and their economy is bad, you can buy it for, right, a very little pounds, and then the pound versus the dollar is low as it's been in, a generation. So now you get a new market, existing equipment, and you probably can even get some bakers that would be happy to work for you, and your return on capital is high again. Okay? And then you kind of maximize that output, and then you decide, let's go to France and make some bread. Right? And then you start doing all of that. You understand? And so right now, the United States is it's at maximum. You cannot hire workers. We're at full employment. Okay? The stock market's at all-time highs. Okay, you might say, well, Wayne, in the last 3 weeks it's come down. Dude, okay, think bigger than the last 3 weeks. Okay? So we're at that situation where no matter how bad it is in Europe, what happens is your return on capital will be higher, right? Return on capital will be higher if you invest into Europe. Because, well, first of all, there's a market, but second of all, prices are low relative to the United States. Therefore, the return on that capital. Okay? So here's a third way of looking at it. If you assumed you can make $1 million, right? One investment to ensure this $1 million return will require $990,000 and you believe from that you'll receive $1 million. Or the other one costs you $550,000, of which you are certain you would get a return of $1 million. Which one would you do? Okay? And you say, well, right? They might even be very similar opportunities. The thing is, this one's already maxed out. This is already fully invested. You could look at the U.S. market as potentially fully invested. Okay? Labor is at a shortage. So more labor is more expensive, and that's good. You can go to France, and it's 20% unemployment. And the French know how to make bread. You see what I mean? You can get a good baker, pay them euros. Oh, yuck. You want some euros? Oh, wow. Right? It's like working for peanuts or bananas. Euro. Okay? And so that's the business sense behind, in this kind of economic situation, why will the euro suddenly go up? Okay? Well, that's because this economy is already fully invested. Okay? So we were talking about that, was it yesterday or the day before, about investing into Africa, where if you find a country with very low labor wages, maybe because skills are low, and there's no factories, there's no machines, people are still using hand tools to do things, and then suddenly you come in and let's say make a simple low-cost product like a widget, you go in there and hire a whole bunch of people and put in a bunch of machines, and all of a sudden you got this factory going. You can make your widgets a lot cheaper than if you were building them in an OECD country, right? Where you have to pay laborers $100 an hour, right? And you're forced to give them benefits, and you're forced to give them safe working conditions, and that kind of stuff. And you're like, wow, I'm going to have to price my widgets very high. And then you can go to another country and you're like, oh, you pay them $1.10 an hour, not 100, and no benefits, and you can put them in horrible, horrible working conditions, no air, no light. And you're like, yeah. Of course, that's not what I'm recommending. But what I'm recommending is you train the workforce, build a huge factory, right? And because of the low wages, your productivity goes from 0 to 100 overnight because of the return on your investment in capital and a return on investment in labor. Okay, and your productivity skyrockets. You build a second factory, your productivity still goes up. You buy a third one, fourth factory, and per unit now on the margin diminishes. Okay. All right. Max says, hey, what do the moving averages mean? Can somebody pull up? I'll do it here. Hang on. See, Max, I did a free training course just for you 9 years ago. You're welcome. This is for Max and everybody else. YouTube.com/FXBootcamp. Here we go, Max. It's been sitting here for 10 years waiting for you. Bum, 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 bum. This is your day, Max.
U.S. markets is driving some investors to foreign currency. Joining us again from Atlanta with some tips on trading in foreign money is Wayne McDonald. He's chief currency coach.
Boom. This is your lucky day, Maxie boy.
For you. But look, more often
That's
than
why
not,
they called you Max, not minimum.
leverage is going to work against you. Do not trade real money until you have a track record of success, because they're measuring things in the short term. For trade, they use 200 EMA. We're not going to talk about that today. For volatility, they cross a lot throughout the day.
Ah, there's your answer right there, Maxie. Hi, my name is Max. This is my brother Min and my other brother Min. Yeah. Cool. So anyways, yeah, so I don't know what's going on anymore. I don't know where we are. What are we talking about? What's going on? I don't know where I am. Let's see. Okay, let's zoom in here. This is daily. Let's go to 4 hour. Okay. Okay. What do you think? I think the comment I made, and I actually don't even remember this anymore. I guess it would have been Tuesday when we were there. I think the comment I made was, if it was going to reverse back up, then it would do it here. And I said, I don't really want to buy pound either. I have to be clear on that. I don't really want to buy it. I understand why. I mean, I've been saying it would go up September, October, November, December based on my hypotheses, right? Jorge says, what about the MACD? I think that's the second video in that training video. So it's about 100 hours of training. I believe it goes, I think it goes moving averages, oscillators, Fibonacci, and then pivot points. Okay. I think that's how that goes. So anyways, guys, I've been saying up on all the end pairs for 6 months. Okay? Ron says, I did project that out. I did? Good. No, I didn't mean 100 hours. I think I said 100 minutes. I meant to say 100 minutes. Sorry, Alexis. Anyways, so here the big stink with this, guys, is Ron says I predicted this. Yeah, probably not. I probably wouldn't use the word predict, but the thing I've been talking about for 6 months is that somewhere around the third week of August, in preparation for SEP to DEES, okay? It's not that it has to start the third week of August. It's that I start the third week of August. And I have a hypothesis in mind, and we call that a strategy. Okay? And it's really a portfolio strategy, right? So, I still haven't been able to teach this to you guys. This is advanced. I think, 2 years from now, I think I'm going to start an advanced, like super serious, super professional trading group, like people that either are trading other people's money or going to trade other people's money, that are already successful in technical analysis, and they got the fundamentals, and they're, all this kind of stuff. They're really going to that next level. This portfolio strategy needs to be taught, but so few people get that far. Hey, Forex is a tough gig, right? But I feel like it keeps building up to this, but I don't have time right now. But the idea was, this strategy was that September through December, I would like to be long yen pairs. Right? So what I would have said earlier this week, Ron says I predicted this. Well, it's more like, again, I don't like the word predict, but if it's going to go up, that would be a very obvious place, both on a weekly and a longer term price action basis. And that if I wanted this to go up, when it got into this zone, remember, this is way different than predicting, right, Ron? I'm not picking on you either, Ron, right? I'm your number one fan. But what I'm clarifying for everybody is it's not a prediction, it's a plan. Big difference. So if you want to be a bull, and I don't really want to be a bull on this, but whatever, you can argue, okay, now there's not going to be a hard Brexit. There's always some nonsense, So I'd rather you just make a decision. There's always nonsense. Oh, now they're not going to do a hard Brexit, whatever, dude, right? It's just a plan, okay? Yes, you got it, Ron. So if you wanted to be a bull, for all your fundamental reasons, then a double bottom is a trade. And then a higher low is a trade. Everyone understand this? Say aye. Come on. We're not saying it's going to go up, but if it's going to go up, the next two trades would either be a double bottom or a higher low. Everybody understand? Say aye. Yeah. Aye. Okay, that's called a plan. That is called a plan. It's incredibly important. If you think this way, you will be successful. Right? If you think this way, you will become successful. If you trade this way, you will become successful. If you trade this way, you will become successful. If you trade this way, you will become successful. Stop everything else that you're doing. And everything else you've been taught before you came into these webinars. Because they're a disservice. Just trust me. You just have to have faith. You have to start with a hypothesis and then use technical analysis to confirm or deny your hypotheses using scientific methodology. That's all I preach. Not smoke and mirrors, not rah, 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 not let's get all excited about my new trade strategy of the week. Oh, and it's got a super funny name. I want you to understand there's no sexiness about that per se, except we're not talking about an improvement in your trading. Do you want to improve your trading, or do you want like a revolutionary change in the way you think about financial markets? Which one do you want? Do you want to work day and night stuffing the oven in your kitchen full of loaves of bread? And you're like, honey, I got to stay up. I can do one more and get 4 more loaves of bread. I can work all day and make over 20 loaves of bread to sell for $2 each. Or do you want a revolution where you have bakeries all across America and Europe and the rest of the world? Like a complete revolution. So, it's as simple as have a plan. If it's going to reverse, you're going to say, oh, well, a double bottom would fit in there. And, oh, well, here's the weekly target for the low. Here's the weekly swing. So you know what? Maybe we covered it last week in the swing trading group. If some of you guys don't remember and you're like, wait, I don't remember him covering that. I must have done it last week, not this week. Thursday or Friday. But this is the obvious swing trade. And like I showed you earlier, I don't know if it was this pair or a different pair, that completely 100%, without a shadow of a doubt, sets up a counter trend, which is our double bottom. It's just on a higher time frame. People that are on less than 4 hours didn't even see it. If you're trading a daily, it's the basis of your trade. So in this scenario, it might go higher. We don't really know. But if you're a bull, this is what you're doing next. Okay? Next, yeah, we're already talking next week. This is a revolution. I want you to have it. I know you have common sense. Some of you have uncommon sense. But we're going to apply common sense, logic, mixed in with knowledge. Remember, your intelligence is worthless if you have no knowledge. You can be intelligent, but have no knowledge. You could be intelligent and not know how to read. You can have knowledge, you can have intelligence, but not know how to write good. Okay? That's just education. You take someone intelligent, give them the knowledge and illuminate, right? So I know you have the intellect, right? Now I just have to give you knowledge and experience and carry this out. But unfortunately, everyone brings baggage with them, good, bad, and the ugly, right? So I want you to already be thinking next week. You understand? We're like last week we talked about this. We're already talking about next week. And once again, I don't know, I must say it 5 times a day, right? If you're on this chart looking for a trade, you've already lost. I'm on tomorrow, I'm on next week, son. You can't compete. That's where you step up, right? This is where you step up and say, I'm on board, I'm drinking the Kool-Aid. The link is in the description below, Benjamin. It's called charts.fxbootcamp.com. Plan to fail, fail to plan. Yeah, Sophie's right. But that's like the small part of it, right? That's the smallest part of it. It's so right. But what do you do to someone that says they want to be a professional athlete and they don't go to practice? What do you do with somebody like that? I want to be a professional golfer. Okay, so let's go hire a coach and get you out on the driving range and get you out onto the course, and let's put some serious effort into this 3, 4, 5 hours a day. If we're talking about a kid, we'll say every day after school you'll go to the driving range and you'll meet with your coach, and you'll be on the team and you'll do tournaments and stuff like that. And the person's like, I don't want to do any of that. And you stop like, what do you mean? Like, oh, I just want to be a professional golfer. I want to be in the PGA. And you're like, why do you want to be in the PGA? Oh, I want to do commercials. And I want to be a millionaire. I want to drive a yellow Lamborghini. I want to have a wife that's 1 foot taller than me and 10 times better looking. That's why I want to be a professional golfer. Oh, okay, that's strange. But so you want to be a professional golfer, but you don't want to golf. No, I don't like golf. I don't like even being outside. But I want to be rich and famous and successful. Like, what are you talking about, right? So that's why, like, Sophie's right. Fail to plan, plan to fail. But, like, what do you tell a currency trader that says, I want to be a professional, but I don't like planning? I don't like to have a strategy, but I love pulling the trigger. I love jumping in and trade. I love flying at the seat of my pants, making decisions from my gut. I just like winging it. And it's so exciting. I love sitting at my desk 10, 12 hours a day losing money. Right? It's amazing, right? What do you tell somebody like that? It's a difficult thing. You have to have a plan. Yeah. You have to be patient and disciplined. Yeah, I'm patient. Yeah, good. Where's the next trade? Put me in a trade, Wayne. Tell me what to do, Wayne. You have to be patient and disciplined. Yeah. Give me, yeah. I'm totally patient. Let's go. Where's the next trade? What do I do? Sell here, Wayne? Should I sell Euro Yen? Right? It sounds funny, and I'm probably even pissing some people off. But it's amazing how often that happens. Where's the trade? Give me a trade. I want a trade. What's the trade? Okay? We're going to fix that. Well, that's why I get worried about like the EA stuff, right? Where I'm like, why? Okay, EAs are tools. Let's put it that way. And the EA is an algorithm, and they're very helpful. But that's it. Okay, that's it. That's it. They're only tools. That's it. All right, so let's do some analysis here. What am I on? Aussie yen. Great. Love it. Okay? Great. Loufle tout le monde. Looks like I got a fib on here. Let's get rid of the fibbo. Oh, well, I guess we can leave it here. So I had a trade plan. What do you think of this one? Seems reasonable, doesn't it? We're just trying to make a higher high. Cool. So I had 2 trade plans on here. I don't know if you remember. Okay, plan A, and then another one down here, plan B. Okay. Cool. Now, this I actually entered here on the dip. Okay. Well, but whatever. And so we got this fib, and it could do this, but it could also do this. You don't really know all that kind of stuff. What I did was I caught the double bottom, so you can't see it because we're only on an hour. But I think I went out to a daily chart, and I'm like, oh, this is a double bottom. So if I'm a bull and I want to buy, what would be sort of a first case scenario? Well, a double bottom would be great. So this is a big double bottom, not a J-low. That's a big wide bottom. This is different. Okay. And we, of course, set this up way in advance. Okay. And then it dropped, it hit it. Now, I could just buy it there. But that's not what I'm teaching you. Okay. This is my coaching account. So I wouldn't coach you into just blindly buying something because of the price. But we do have the price. Okay. Then we have a higher high. So what's the next scenario after that? Higher low. So I bought here, and what I bought, if you will, was it made the higher high, it dropped, and it started doing this. So I bought it plus the spread, right? And there's the plan. All day, every day. Because now, when you add a higher low to a double bottom, what do you guys get? You guys remember your technical analysis course? Yeah. Sophie says it's definitely hard to convince someone to achieve. Yeah. You know, the problem is, I suppose there is a limitation. Some people cannot be successful. Right? Most likely they can be successful, but they either quit before you have an opportunity to help, or they fail before you have an opportunity to help. But the saddest thing is they have the potential inside them, but look, if mommy and daddy didn't raise you properly, sorry. Or if you're in if you're in a life situation that gives you challenges that are unpreventable, that unpreventably hold you back from your destiny, as your coach, it's really hard to say, I can't change that. Right? It's very, very difficult to change that. Prince Philip's self-sabotage, that's all included. That's all included. Anyways, let's go back to this. This is a 1, 2, 3. So, quick review. Okay. Double, okay, so 1, double bottom. Okay. Two, higher high. Three, higher low. Okay. Typically, I eyeball this, but you can also do Fibonacci. Okay. All that kind of stuff. So that's all I did was I got the double bottom, which we predicted days in advance. Then we got the volatility, which got us the higher high. So I dropped a trade on the higher low, and boom. Okay, that's all. The entry is, let me do yet another color. well, let's just go with the gold color. The entry would be about here. Okay? Just after the turn. So maybe let me thin this out and then do this in black. So it's like you hit, oh, I didn't want that. Okay. So it's not, you need the retracement. Okay. But it's the bounce that you trade on like a 5-minute chart. Okay. Now, of course, those who are on the ball absolutely can put another trade here. Because you already anticipated the double bottom. I told you guys days, maybe a week in advance, that was plausible. Okay? And at the time, too, I remember saying things like, there's nothing on this chart now that predicts that double bottom. How many people remember that? There's nothing on this chart that predicts the double bottom, but I'm using fundamentals and seasonality to make an assumption. Anybody? And remember, by assumption, that means a plan. That's all it is a hypothesis. That's all it is. That's all it is. That's it. Anyone in the swing trading group looks at this and sees exactly what I did without any confusion. I'm sure they look at that and go, oh yeah, I see what he did. That's it. You're just like, yeah, totally get it. Okay? Most of July had nothing going on, and then there's this massive move. But remember, the central bank cutting interest rates and all that kind of stuff, but it gave it all back. Okay? And then what? The rest of August, nothing happened. And then September. Cool. It moved in September. Great. But that's what we talked about. Yeah. Cool. Nice. Neat. Right on. For sure. All right. Let's do some gold and oil. All right. Oh, man. Did I draw this actually for you? How long ago did I draw that? It looks like 4 weeks ago. 1, 2, 3. 3 weeks ago, that was the trade plan? Nice. You're welcome. Okay, you're welcome. You're welcome. All right. Okay, cool. All right. That is pure price action. Okay? Super, 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 super straightforward. Okay. What else do I see here? Absolutely, without question, super simple entry if you're a bull and super simple entry if you're a bear. I believe these are day trading pivots. Okay, so if you're a day trader and you're a bear on gold, This is unequivocally the price to short. And unequivocally, this is the price to buy. I put it in a book 10 years ago. Cool, right? So what's all this stuff in the middle? I don't know, what everyone else does, I suppose. And now lastly, you're like, well, Wayne, which one's right? Well, first of all, they're both right. We don't know which one's going to be profitable. So if you have your bias and you trade your bias day 1, day 2, day 3, day 4, day 5, day 6, week 7, week 8, week 9, week 10, month 11, month 12, month 13. Like you go like years with a bias. You will be successful as a trader. Okay? You simply trade a bias. And I don't care what your bias is. It's irrelevant. It really is totally irrelevant. Bears had an opportunity to make money today, and if they know how to swing trade, knew that they'd be threatened here. And as soon as they saw a double bottom at the London Open, they could have just got the heck out and just made money. Bulls knew exactly what their price was, and they traded that. And now they're making money. So you could, theoretically, be a bear and make money, or be a bull and make money. It's the people that don't have a bias that lose. You understand that? Someone that sold and had a trade plan and then moved their stop, they're not in this trade anymore. People losing money didn't have a trade. Okay? The way I think it is, like think of it this way. Let's think of it this way. 2.5% of the market are bulls. 2.5% are bears. And 95% of people lose money because they're not a bull or a bear. Losers. Just make sure you're on one. If you're not on the first two, you know where you stand. So, bulls will likely have an opportunity to make money today. Bears have already had an opportunity to make money today. On the long run, if you keep taking your opportunities, very often you're going to break even. Once in a while, you'll have a small loss, but very often you're going to have good winners. Your break-evens give you opportunity, but don't cost you anything. You'll have a few small losers, but it'll be water off a duck's back, and the majority of your trades are going to be profitable trades. But that's how you trade. That's how you're supposed to trade, right? Okay, so what determines whether you make money today or not, well, actually, it's not even that. Let's say what determines the profitability, not whether you'll be profitable, but how profitable, are market conditions, what we call the beta. Your alpha is your decision. Are you a bull or a bear this year? Okay. And when your alpha agrees with the beta, actually the other way around, if the beta agrees with your alpha, you're going to make more money. So if you're a bull and you bought down here, you made money. If you're a bull, you bought here and you made money. And you're making good money. But don't worry about it. Things change. That good fortune will go away. It's not your fault. You didn't do anything wrong. And the bears will make their money. Okay? So bears would have sold up here. Look, right? Maybe you made some money here. 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 Tried here, probably lost. Then they sold here. Yeah, made money there. And now what? Well, they're going to think about selling here tomorrow or selling here tomorrow. So they have tomorrow's trade plans. And you know what? If they sell those prices, they'll at least make a little bit of money, is my assumption. I'm quite confident that even, right, whether you're a bull or a bear, I think is irrelevant. If you trade properly as a bull or a bear, you'll make money. And when your trades are with the market, you'll make a lot of money. When the trades are against the market, you'll make a little bit of money. And everybody else is in between. Everybody else is in between. What do you think, guys? I hope you believe me. I hope you believe me. So if you wanted to buy gold, you're about 2.5, 3 hours late. When did I tell you you're supposed to trade gold? I went over this twice in the last week of webinars. I told you specifically the times to trade gold and stop trading gold. And I said if you do that, within 2 hours, you'll have 70% of the average trading range. Okay? So 2 hours ago. So let's do this. 1, 2, 3, 4, 5, 6, 7, 8. Right there, guys. So let's say 4 or 5 or 6 days ago, I told you this is the exact time to trade gold. This candle right here is the exact candle. If I'm making that crap up, you let me know right now. Yeah, there you go. That's how you trade gold. I know, I already told you. So I think it was yesterday, right? I think it was yesterday I broke down a full 24 hours almost by like 2 hour segments, right? Sounds like something I would say. That's funny. Hey, man, put it this way. I had to figure that out. Okay? I had to figure that out. Do you understand that? There were no Forex experts when I started trading Forex. There were no Forex books. There were no Forex courses. So I had to put in the blood, sweat, and tears for years. I mean, think of it, just what value would you put on that? Like literally how much of my time and effort and really real money until I figured that out. What's the value of that knowledge to know the candle I start trading gold? $25,000? $50,000? To know this is the candle I start trading gold. And 8 candles later, I'm probably done for the day. And I could trade another 5 hours, but it wouldn't make a damn difference. So I might as well just take the rest of the day off. I give you that for free. Okay? Yeah. Well, you better have an account to Trader's Way. Otherwise, shame on you. Okay, let's move on. What do you want to do here? lot, huh? What am I supposed to, what do you want me to do? Put a bunch of like slopey trend lines everywhere? Yeah. Can we look at Eurozar? Sure. That's a great one. That's been moving fantastically. Okay. You want to change this up a little bit? Does that put some order to it? Let's put it this way. Swing traders know what this means. Swing traders know what this means. This has importance to a swing trader. Okay. And on top of that, there's an inside lesson, hint, 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 here and here, here and here. There's an inside lesson to here and here, and on a weekly inside, right, lesson, and on a monthly basis. A swing trader knows exactly what those mean, and it has importance. Okay, and then you can go to here and go back, and if you didn't know how to swing trade, you'd look back at this and say, there's not a lot of meaning to this market. Like you might say, well, this is where we are now, but we're in the middle of the range, so that doesn't make sense. And then you can really start fitting your analysis into price action. And you're like, well, this huge top here is meaningless, but this little top and this little bottom of the big top, and then this, and you start backfilling so that it makes sense to you, but honestly, it doesn't. There's nothing there. So you're like, well, why is the market behaving the way it is now? Why did the market drop just before summer and then move sideways all of June, all of July, and all of August? Seasonality, maybe? And then why is the market moving on these prices now? But like I said, this line here and this line here, we know what that means. Swing traders know what that means on a weekly basis. And a swing trader knows what this, oops, I wanted this in a different color. Come on now. And swing traders know what this means and what this means on a monthly basis. And suddenly, it all makes sense. Then you throw in a hypothesis. You ready for this? What was my hypothesis? Well, I'll just say months ago that this would do this. Like at that particular moment, in fact. Now, I'll remind you, right, that we talked about risk off going into the Fed meeting in June, sideways action during the summer, and then a resumption of trend in the fall. That's my basic strategy, isn't it? And this is oil, by the way. I know I changed it, but anyways, this is oil. Okay, so this is incorporating fundamentals. So you need to know supply and demand sides of the equation for oil. This is seasonality. And this is macroeconomics. And this is technical analysis. That's it. How many people love this? Is anybody loving it? How many people love going through all these things? And somehow the simplicity and the complexity of it are both attractive. Do you think an EA could do that for you? You could just set it, forget it, turn your EA on, walk away, and you're going to come back next month or next year a millionaire? Cam, you've already missed it. That's the problem. What you're saying, Cam, and by the way, I'm going to say something, Cam, and I don't mean to be rude. But when you say that, it says to everybody, you don't know how to trade. But you should also realize, hopefully, that you have the resources to understand. Okay? So, Harvard's, here, let's do this. I don't know if this is going to work. Turn this off. Okay, you see this? And if I can keep this steady, it's not going to come out. The camera's not good enough. You see that crest? There's 3 books on it. Trying to get this. Oh, will it do it? There's 3 books on it. And on the books, it says Veritas. Truth. Why would they put that on the 3 books? The truth comes from knowledge. Okay? And I don't have it here, but when I graduated, they gave me a lamp. A lamp, like a genie lamp, right? But historically, you'd put oil in it and you'd light it. The Illuminati, the enlightened ones, have truth. Truth meaning knowledge. They see the truth. There's no magic, pulling strings, all this. They have the truth through knowledge. You understand? That's how you become illuminated. The Illuminati. You know. Okay? So you have this chance where if you just realize, like, I don't know what the heck he just said, but everyone just said yes, 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 awesome, 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 awesome. You have now found the place you need to be. When you walk into Harvard, you know. You're like, this is it. You just know. Everybody knows. It's probably the only university in the United States where there's thousands of tourists every day. Why do they show up? Because that's where the Illuminati are created, right? So all you have to do, if you have the work ethic and half a brain, whatever you were born with, if you haven't ruined it, okay? If you haven't ruined it with drugs and alcohol, you have enough. Now we just need to add the knowledge. Now you might still not have like the learning skills, and you still might not have the full work ethic. Like I think the people that go through live.fxbootcamp.com or performance coaching, they show up and they're like, yeah, I'm pretty good at technicals. I'm I'm all right with fundamentals, but I'm not really having the success I need. And then they start doing it and they're like, oh my God, I haven't even been doing half as much work as I should be doing. Yeah. 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 But then now you know. So to the person that asked, who was it now? I have to zoom back up. Do I buy now? Cam, when do we buy? You require knowledge. Okay? So you have a couple of choices here. Come to this webinar for free every single day. Make sure you go to tradersway.com, open up an account. You can also download my chart templates for free. There's also free training on the Traders Way YouTube channel, the Forex.Today YouTube channel, and the FX Bootcamp YouTube channel. And I've already shared links. All for free. All the training, the tools to make you successful. All you have to do, Cam, is watch 5,000 videos on YouTube. And then you laugh like, I know people. There are people in this room that have attempted to do it. And it's free. It's totally free. I know for a fact you could probably get pirated versions of my book. I don't make any money. That just screws the publisher. But if you were ridiculously focused and you had a ridiculous, sickening work ethic, you could master this for no money down. But if you don't have 10 years to waste like I did, like it took me 10 years to figure this out. You can also just go to FX Bootcamp, add money, and skip 10 years. Like I give you the chart templates for free. People are like, yeah, it's got like 5 tools. 5 or 6 or 7 tools that are really nice. You know what? Dude, there's 10,000 indicators and EAs and scripts that don't suck. It's not you have to understand when I give you like, here's 6 things that will help you become profitable. It's not 6 things, it's 10,000 things I didn't give you that suck or waste your time. It's the 10,000 that are not included that's most valuable. It's the 10 years of effort, blood, sweat. You can't imagine how ridiculous and sickening my work ethic was in the beginning when I was teaching myself how to trade Forex. You can't imagine the lengths I went to try to figure this stuff out. Now you can go, boom, put some money into a machine, knowledge comes out. Like, it's crazy, right? Most people do trial and error. They fail. If you worked at a bank, you would work for a senior trader and they would teach you everything they know. Okay, so anyways. So plan B would be, if you actually have some money, go to FX Bootcamp, buy a course, take the training, join the swing trading group, go through performance coaching, and become an amazing trader, let's say, in a year or two instead of a decade or two. And you say, decade or two? Wait, I got to get rich like quick. Yeah, you've already failed. Thank you very much. Good luck. And it's amazing to me too, people with a little bit of money don't even think that way, right? I got to get rich quick. I don't have $1,000. Wow. That's why it doesn't work. So there are resources. You can do it for free. And I swear to you, you can still become a success if you actually pay attention, take notes, and it's like going to Harvard yourself. You could do it through all the free resources. That's why I did it. And you will be a success in less than 25 years. I'm certain of it. I can't guarantee it, but I'm certain of it. For zero money, if you go through and you work your butt off and get really, really good at what you do, and I mean ridiculous level of work. And I don't mean that in a bad way. I'm not talking you out of it. I'm talking you into it. And it'll take you less than 25 years. Right? That shouldn't scare you. If it scares you off, this is what's holding you back. Jorge says, Wayne, any macroeconomic book that you recommend for Forex? I've never read one. So I don't know. I'm sorry. Gold is going crazy. Gold is going crazy. Gold is going crazy. I always love it when people say things like that. It's just gone crazy. It's on fire. Yeah, you should have been in it. I mean, here's the funny thing, right? If we know, for example, that this is the candle you're supposed to be trading, what would you do here? Knowing that you know how to, like, just basic trading. Would you sell here? So I said, let me change the logic here. I say you have to be at your computer, and during this candle, you have to trade. Okay? And by the way, Jorge, I'm assuming you've taken the fundamentals course at FX Bootcamp. Okay? So no trade plan, guys. I'm not talking about a trade plan. I'm talking about you are instructed as a trader to either buy gold or sell gold, but you have to do it during that candle. Based on what you know, do you sell or do you buy? I'll give you a clue. You're at ridiculously obvious, without a shadow of the doubt, for about 4 different reasons at hardcore support. Do you sell at hardcore, obvious in your face like a slap support, or do you buy? You have to do one of them, or you will be dragged out into the field and shot. Which one do you do? Do you sell at support, or do you buy at support? So what's the problem? Steven's like, buy at M2 to M4. That's even more complicated we need to do. Do you sell at support or do you buy at support? That's it. That's as complicated as I'm getting at this point. Okay? Right? So I told you this is the exact time, if I were me, would I'd be trading gold. Now, do you think I'd be selling at support or do you think I'd be buying at support? What else is there? Where's the complication, right? Aren't we supposed to be simplifying? Imagine now you actually had a bullish bias. And now you know how to trade gold. You know what time to trade gold. And you know what direction you want to trade gold. But that's what a trade plan is, my friend. You just figured it out. You just had an aha moment. You had a plan, you had a price, and you had the knowledge. The price, the time, the knowledge. The plan, the time, the price. 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 This is a three-dimensional universe. You have a plan, you know the price, you know the time. Take a shot. If it's impossible for you to sell this, then you wouldn't have sold it. Why is it impossible? Well, you're either a bull, but even if you're a bear, you don't sell at support. What are you, mental? What's wrong with you? Right? You should be asking yourself that. If you're a bear and you sell at support, like, what's wrong with you? Like, nobody sells there. I want to make this point clear. Nobody sells there. Nobody sells there. Bulls don't sell there. Bears don't sell there. What is the major malfunction? Nobody sells there. Nobody sells there. So you either don't sell there or you buy it. Well, no, someone might sell this, and you'll say, well, Wayne, that's the same price. Oh, I know. What's the difference, guys? One is support, one is resistance. Same price. Hi, my name is Wayne McDonald. I am a bear. I sell at resistance. I just described what I do. If you get asked, hey, what do you do for a living? And you go on for like a 9-minute ramble and babble fest about what you do, you don't know what you're doing. My name is Wayne McDonald. I'm a bear of gold. I sell at resistance. And I turn gold into cash. Right? That's it. Or, hello, my name is Wayne McDonald. I'm a bull on gold and I buy at support. Done. 3 points, nothing but net. Okay? So I think, oh, by the way, I've only slept for 5 hours. You got to keep up. I'm telling you, you got to keep up. I swear to you, I'm like sweating. I've drank so much coffee and so many energy drinks, but I took time to meditate this morning, right? All that I'm doing what I can, but that's where you got to go. You got to have ridiculous, sickening work ethic. But I had a break between school in the summer and before school just started. So I had that 6 weeks, and I've been working on like the swing trading group for you guys and updating a few other things like the chart templates and stuff. And I've done some reading, and I realize we all need to up our game somehow. Right? And I feel like somehow we've all drifted into marginal improvements. Oh, if I could only hire another baker, or if I can only buy another oven, I will increase my per unit profitability by 4.27%. I think we should, revolutionize the way bread is made. I think we need to all up our game big time. I need to up my game in teaching you. The problem is I don't have time. This is the big thing. I have no time. I swear to God, I had 3 minutes to run upstairs last night, kiss my children goodnight as they go into bed. I didn't even have time to give my wife a kiss. I ran straight back down, back at it. And then I'm tiptoeing into bed at like 1 o'clock in the morning, sliding in to get 5 hours sleep. Alarm goes up, straight into the shower, energy drink, meditation. Like I don't have 3 minutes in the day. That's what I'm working with. I'm squeezing in, but I still feel like I need to find a way to help you revolutionize what you're doing here. And that somehow and I think it's my fault too, so I apologize. I think we've been focused on marginally improving what you do as a currency trader instead of destroying everything you had before we met. Destroying it, breaking it down like boot camp is supposed to do. Break it down, strip you emotionally naked, and then build you up disciplined with a whole revolutionary way of trading. And what do I mean by revolutionary? Complete, total understanding of how the market works. Not a little trick and not little 5/8 crosses and only if I had an EA and if I do this thing and I do. No, an absolute total domination of knowledge. Complete Illuminati. And now it might take you and I another 5 or 10 years to get there, but you know what? That's where I want to get. I'm having trouble focusing on Harvard because I'm focused on you, and I am not joking. I think that's where we need to be. I want you to have absolute total domination through your thought process and the way you manifest that into the market. None of this little tricky stuff, smoke and mirror nonsense. Okay? A total, absolute revolution in the way that you trade. And the revolution is through complete knowledge of how it all works so that you can just carry out your thought. That's it. I don't know if your thought about whether gold is going to go up or down is right. I don't know about if your thought about Brexit, hard Brexit, good Brexit, deal, no deal, Euro going up, Euro going down, what's going on in Turkey, what's going on in South Africa, what's going on in China, all this stuff. Like, I don't know your opinions or even how you get there. But if you have a logic, an intelligence, like truly an illuminating opinion, because you could back it up with research and thought process and experience, and you say, I've gathered all of this knowledge and I have this opinion, and then you do it, I think you'll be a huge success, even if you're wrong. That is revolutionary. Or go buy an EA for $50 and have it do the work for you and get rich quick while you sit on the beach drinking a cocktail, driving your yellow Lamborghini with your girlfriend that's 1.5 feet taller than you, and go ahead and believe that nonsense. Keep dreaming, because I can't fix that. I hope you put the effort into doing this. And I think if you have any money, you should join boot camp. I don't know. You're thinking he's doing that because he wants my money? No. That resource is there. I don't know what else to do. I mean, you need to be a success. I've documented my knowledge. You need to join. And then we can work together. And then there's more things coming, guys. As soon as I can bang out this stupid graduate degree, then we'll just go on to other amazing things. But if you're not ready in 2 years, if I'm working on stuff 2 years from now and you're not ready, you're going to just miss the boat. I'm going to move on. The next thing will be about starting your hedge fund and raising millions of dollars. I need you to be ready. I need you to have a track record of success within the next 2 years. And if you do, I'll teach you how to raise money, millions. And